So in less than 24 hours, we're about to witness a massive move take place in regards to Tesla, and that's simply because, you guessed it, we are about to see Tesla announce its earnings tomorrow after the close of the bell. Now this is going to be a huge week for the broader markets in general, since we are seeing pretty much the S&P 500 have 40% of its companies announce its earnings. So it's definitely going to be a huge driver for the broader markets, but this is a video specifically about Tesla, and I want to go ahead and touch on what are some of the things we're seeing in regards to their earnings and a couple of things we want to be mindful of. But I also want to just highlight that Tesla hasn't been doing pretty well for quite some time. In fact, on this channel back in December 28th, I've made countless videos since then stating that Tesla stock was overvalued and it was most likely going to fall down pretty heavy, and that's exactly what we've seen. We've seen new lows happen almost every other week. In fact, we saw another new low for today. But in this video, before we go ahead and talk about some of the things that we want to be mindful of from just a fundamental perspective, I want to highlight some things from a catalyst perspective. Starting off with this headline right over here stating that Mercedes becomes the first automaker to sell level 3 self-driving directly to US consumers. Now, this is obviously something that doesn't bode very well for Tesla, especially because we know that Tesla is trying to ramp up the process of FSD becoming an actual thing. But as you guys know, I don't like to feed you guys the Tesla Kool-Aid on this channel and tell you how every little thing that Tesla's doing is great for the channel. But with that said, that doesn't mean I also want to share, the Kool-Aid for Mercedes. And I want you guys to understand that this headline, although it is a negative catalyst for Tesla, it's honestly something that really doesn't have any significance to it, especially when you read the fine print for this level 3, self-driving Mercedes. In fact, if you look at over here, the fine print states that drivers can activate Mercedes technology called Dry Pilot when certain conditions are met, including heavy traffic jams, during the daytime, on specific California and Nevada freeways, and when the car is traveling less than 40 miles per hour. Drivers could focus on other activities until the vehicle alerts them to resume control. The technology does not work on roads that haven't been pre-approved by Mercedes, including freeways in other states. And so while the headlines may make it seem that Mercedes is significantly ahead of Tesla in terms of FSD, the reality is that level 3 autonomy is not that much greater in terms of functionality. It's just simply greater in liability. But here's the thing, when there's a lot of restrictions stating that, hey, you can't do this, you can't do that, you can't do that, well, does it really matter? I mean, you could pretty much have a Tesla be restricted to drive in a parking lot and say, look, you don't have to look at the wheel, and automatically claim level 3 immediately, right? It's not about the functionality, it's really about the liability. And so I just wanted to share that while this news is of course a bad headline for Tesla, it's not necessarily the end of the world, and it's not that Mercedes is so far ahead of Tesla, but of course, that's just something you guys want to be mindful of. Now, I actually want to go ahead and talk about some of the things that are really important in regards to Tesla, like the actual earnings. Now, independent auto researcher Troy Teslike recently shared this chart over here showing his pretty much predictions along with the expectations or consensus from Wall Street, and he predicts that the non-GAAP earnings per share is going to be 48 cents. Now, this is definitely going to be a horrible earnings for Tesla, as it's going to be one of the first earnings that we've heard in the last 4 years where we see things declining pretty heavily. Now, I want you guys to pay attention to this part right over here, where we see that the estimates and the consensus for revenues and costs are lower than the figures reported in the quarter of, or pretty much any quarter of 2023. And this could indicate an expectation of a decrease in business activity, or the bulls may tell you that this is just because we're seeing increased efficiencies. Because when you look at the cost of goods sold, you actually see that it's actually going downwards. And so while cost of goods sold going down is a good thing, because that would indicate that, yeah, there's efficiencies or maybe there's lower prices for raw materials, it really doesn't matter when the revenues are going further down below. I mean, take a look at this. Back in Q1 of 2023, we saw that the total cost of revenues was this number right over here, but we see that at least the revenues was this figure right over here. And so while we're seeing that the cost of revenues are going back down to what it was in Q1 of 2023, we see the revenues, the expectations, far below what Q1 of 2023 were. So that's not necessarily a good thing. But we also have this chart right over here, also from Troy Tesla, highlighting how Tesla sales in Europe might have hit a peak back in 2023 as we haven't really gone above it. And so of course there's a lot of concern for this earnings report and it's likely to be bad, but I think Ross Gerber baby, or Ross Gerber, I like to call him Ross Gerber baby now, but I think he said it the best way you could possibly have said it in this tweet or this post over here on X, showing or stating how Tesla's earnings will be bad, but don't worry, that won't be the issue, ... the guidance ... as we may have a little relief rally after earnings if they're not totally atrocious, but unfortunately Tesla will be unable to sell more cars than the past with the current strategy. Now, I don't agree with everything that he's saying in this post, but the reality is, yes, their earnings are likely to be really bad, but it's all about the forward guidance, right? Because of course, if we hear good forward guidance that, look, we're going through a troubled time, but going forward, we have X and this and that are going to do well in the future, well, it may not be horrible, but the likelihood of that taking place or hearing that positive forward guidance, well, it's very unlikely, especially how we had horrible forward guidance for the last quarter, right? So that's kind of something that we want to be mindful of. Now, right over here, we see the discounted cash flow model that we see from Simply Wall Street, stating that the fair value for Tesla at the moment, without the update of the fundamentals, is at $94.90, while Tesla is currently at this 147 price right now, which is stating that it's 55% overvalued. Now, I want to kind of remind everyone that while DCF models are great, right? You want to be kind of skeptical about DCF models that you see online, as there's a lot of assumptions in there. I mean, DCF models from any model are going to be, with a ton of assumptions in there, but it's always best to do it yourself. But the reality is a lot of the DCF models that you see across the board, if you do it yourself or you get it from other websites, a lot of them are indicating that Tesla still is a bit overvalued from a fundamental perspective. And that's why I've been saying that Tesla, again, it's been overvalued for a while. I've called this out back in December, and the reality is I still believe there's a bit more to squeeze down for Tesla. And that's why if we take a look right over here, in my recent video, I stated how if Tesla fell down below the shelf of volume, right over here, where there's very little volume relative to price, well, that was gonna be very bad for Tesla, simply because when there's little volume relative to price, well, if there's selling pressure, that could amplify the stock to go further down. And that's exactly where we are. So we're in a very critical level for Tesla. I said this just a few days ago and people were telling me, Justin, Tesla's not in a critical level. This is the low. But here we are again, finding lower lows right before one of the worst earnings that we are probably going to hear since the last few years. And so that's why, you want to have kind of this confluence of different data approaches. You want to look at companies from a technical perspective, fundamental perspective, and also take a look at the geopolitical environment, monetary policy, and fiscal policy, which we're not going to even get into in this video because we all know that from a monetary policy perspective, things haven't been looking good, as recently the Fed still states that inflation may be a problem, not from pretty much the demand side, but from the supply side, which they have no control over. But that's a totally different conversation that we have to save for a different video, because again, I want to keep this video more tied to or more in line with what's going on with Tesla, which, I don't want to get off track. I'm sorry, just spaced out, just wanted to have a sip of this. By the way, I'm not sponsored by Coke. And I'm not even long on Coke. I just, glass bottle Cokes, I just bought these at Costco. Amazing, right? It has the cane sugar. Not saying you should drink soda, but definitely should get these at Costco, right? But anyways, I want to also point out to something else that I think we should be mindful of. And that's going back to a point I made earlier in this video, how we have a lot of earnings for this week, 40% of the S&P 500, but more notably, we have Meta reporting on Wednesday, we have Microsoft, Intel, Alphabet, all reporting on Thursday. And so these are going to be primary drivers for the market. And so even if we do hear some good forward guidance for Tesla, well, if we hear, kind of bad forward guidance and bad earnings for these other companies, well, that could just drop the entire market into the toilet bowl getting flushed down. And so that's something that we also want to be mindful of, because we know Tesla's a high beta stock, and if the overall market's falling down, we tend to see Tesla fall down just as bad, although we've been seeing Tesla do the opposite, where the market has been going up and Tesla stock has just been going straight down. In fact, today we had a green day for the market, yet we saw another low for Tesla. But with that said, no need to make this video any much more longer. If you haven't done so already, consider tapping that subscribe button so that you don't miss out on any future video. And while you're at it, consider checking out the links in the description below so that you could get access to the Push and Profit private group, where you have access to my daily briefings and my daily, trade ideas. But with that said, before you guys go, make sure to check out this video right over here. Take care, guys.